Monday. We have another episode of Money Talk Mondays, and I'm your host, Jessica Hicks. I'm going to be talking about today large value stocks or high value stocks. And the reason I bring this up is there's been a lot of terms on the internet talking about high value, and really everyone has value. And I'm kind of tired of attaching high value to people. Everyone has value of some sort. So instead of high value men, we're going to be talking about high value stocks because this I feel like actually matters. So we're going to be talking about this in a follow up to the conversation I had last week on Money Talk Mondays, where we talked about real estate investment trust. We talked about dividend stocks. So a lot of these value stocks you're probably going to recognize as some great companies to also look at and look into for value companies that you can get dividends from. And let me just put something in the chat here, because I want to go ahead and put the definition of what is a high value, or you could also say large value stock. And again, we're not talking about high value men, we're talking about high value stocks, because that is the only real thing that matters and has a true definition. So large value stocks or high value stocks refer to companies that are both large cap, so that means they're going to have a value greater than $10 billion in market capitalization. So you're going to take your number of shares of a company, and then you're going to multiply that by the actual price of one share of that stock, right? And then that's what's going to give you the market capitalization. So that is a large value stock. Hello, Tanai. Welcome in. Nice to see you. So that's really where they're coming from when they're talking about market capitalization. It's just the stock price of one share of their stock times the number of shares outstanding, right? So I'm going to put this definition into the chat just for reference here. Let me go ahead and throw that in there. Here we go. So that is the definition. I'm going to hide it for just a second, but it is available in the chat here. So what's the big deal? Like, what's the big deal about large value stocks? What's the big deal here? Well, the big deal is that these are going to be companies that you can invest in that are low risk. They typically are paying regular dividends, so you can be eating off of them. Let's say you buy a certain amount of stocks, they're paying you money on a monthly, quarterly, or twice a year basis. Oftentimes you're looking at stocks that are monthly or they're paying you quarterly. Like, for example, AT&T I always talk about because they pay me quarterly. And then a monthly stock that I've invested in is Realty Income. That is a real estate investment trust, and they pay monthly like clockwork. So I love them for that. Now I want to talk about these other 2 points because these are stable companies. These are not companies where you're going to get a ton of growth. It's not a Tesla. It's not, I'm trying to think of any other kind of fluctuating stock. The best one I can think of right now is Tesla, just because of the fact that they're not seeing profits. So it's not like an Uber, for example. They're not seeing profits. These are profitable companies. They're stable, they're mature, they're paying regular dividends, and they're low risk, which is the most important part. So I'm going to be talking about a couple of companies, actually 5, and then one bonus company that are really nice to invest in because they are going to be the largest value stocks that you can invest in today. Now, I do share a link in the about section for M1 Finance. This is one tool that I use for investing. I use Fidelity. I also use TD Ameritrade, as well as some other exchanges. But if you are looking to buy fractional shares of stock, I would recommend M1 Finance. This is not financial advice, but I use them myself. You can actually buy fractional shares because when I talk about these companies, they are large cap, so their stock prices are very high. So just putting that note out there. All right, so The first one I'm going to talk about, and hello NASCAR All Out. Welcome in. So the first one I'm going to talk about, I've talked about multiple times on this channel, is Berkshire Hathaway. Berkshire Hathaway, most people know this company because Warren Buffett bought the company and turned it into a holding company. Before it was in the textile field, in that industry, and Berkshire Hathaway is now a holding company. So one big company that they do hold is Geico. And when you're thinking about a holding company, well, they will have subsidiaries under the company, and these companies actually have to pay up to the holding company. So they're set at certain standards that they have to make profits. They have to for their holding company. So Berkshire Hathaway, it is the highest priced company, the highest value company that you can look at. And they do pay dividends. So I'm going to put them in the chat. Let me pull up their name right here so you know what I'm talking about. Okay, so this is Berkshire Hathaway that I'm putting in the chat. So if we're looking at Berkshire Hathaway, a couple things I want to note out. The first thing is, now I will say they're down in the market today. They are down in the market. And hello, KB, my member, welcome. One share of their stock is worth today, even with a down market, $429,720. So you're going to need $429,720 to invest in one share of Berkshire Hathaway stock, right? And this is why I say the market capitalization, when you're hearing about $10 billion plus, you're talking about companies with very high stock prices, and you're multiplying that by the number of shares available. So this is a very highly priced stock. Now, the reason I talked about M1 Finance is because you can actually invest in companies that have such a high market capitalization by buying fractional shares of that company. You will still receive dividends from that as well, but it allows you the ability to actually buy into some of these companies. And instead of putting $429,000 and $720 into Berkshire Hathaway, you can get a piece of the pie, right? By buying fractional shares. So that is the number one. Let me see what they pay as far as dividends. I don't see any dividends here. I don't see any dividends, but I will say with Berkshire Hathaway, their stock price is pretty stable. And I will tell you, last year when I looked at the price, it was like $300,000 or something in that range. So, so just gonna lay that right there. Let me see if I can find out if they are paying dividends. So it's a large company, but this is the one company that does not pay dividends, which is a little surprising. But the next one does. So hold on just a second. So the next company, you may not be surprised by this, and I did invest in this company. I am not invested in Berkshire Hathaway. I don't know. Something just held me back, and I was like, I can do more with these other companies. But if you're interested in Berkshire Hathaway, go for it. And I always question also what happens when Warren Buffett is gone. So that's always in the back of my head. Okay. So the next company is Amazon. And Amazon is one of those, it's a growth company, right? Because they're continuing to grow. However, their stock price has continuing to increase as well. And they're pretty mature. They're pretty stable. You don't think Amazon is just going to poof, go away, just like Berkshire Hathaway is not just going to poof, go away if you put your money into the stock. So Amazon is one that we know. The thing about Amazon is it's not just a retailer, right? We know now that they have Amazon Web Services, which is in the IT cloud. Tons of companies want their data in the cloud, and they make money that way. They are also now developing retail stores. They are, they're in the grocery business. They're in a little bit of everything, and they're trending constantly. They're growing. So you know that there's value there. Now, let's look at Amazon quickly to see what their stock price actually looks like, because it's increased since I invested in this company. So their stock now is $3,421. So again, this is why I point out M1 Finance, because who wants to spend $3,421 to invest in one share of Amazon stock? That's tough. And I will foresee them paying dividends in the future as well. So their 52-week low was at 2,871. This is about where I got into the stock, and now they're at 3,770. Wait a minute. That's their 52-week high, but I want to say where they are today. 3,421,000 is where they are today. So that's another one to keep an eye on. Again, you don't have to invest in a full share. You can go to a company like M1 Finance and invest fractional shares. I believe Robinhood, I've never touched Robinhood, but I believe they also follow that model, as well as Stash and what's the other one? Acorns, I think actually, takes your spare change and you invest. So I don't like that because I'm more of an active investor. I want to actively put money in. I don't just want my spare change going somewhere. But yeah, because I like to play the markets and buy low and sell high if I choose to. So moving on along. The next on the list I want to talk about is one that I wasn't as familiar with. I am not invested in this one. This one is Bookings Holdings. So Booking Holdings. So let me put these in the chat. Hey, King Akil, my other member, welcome. And hi, KB, my member, welcome, welcome. So let me throw in Amazon. That was our second one. And then the third one is Booking. Booking Holding is the third one. So Booking Holdings, I was not familiar with Booking Holdings, but they are the ones that, of course, own Booking.com, Kayak, and all kinds of travel online sites. So when you are looking for a hotel, you're looking for a flight or whatever, you use some of these sites. If you use these sites, you probably need to invest in Booking Holdings because, they get a piece of the pie when you're booking through them. But they make things really seamless for you to just do mostly everything at a time. And so you can compare prices and all that. So Booking Holdings. So let's look up Booking Holdings, what their actual stock price is right now. But this is the big one. So again, the market's been on edge. So even on a down day, the price of one share of Booking Holdings stock is $2,277. So that is what we're looking at for Booking Holdings. So if you're interested in that one, again, you can buy fractional shares. The interesting thing about them is I do think they'll stay around for quite a while because travel will continue and people will still want to get deals and have an easy way of booking travel. So that was Booking. The next one I want to talk about is actually the platform that we're on right now with YouTube. Google, aka Alphabet. So Alphabet, I don't think a lot of people realize that you can't just go online and buy stock in YouTube because, or really you don't just search Google. So GOOG is the ticker symbol for Alphabet, but Alphabet is the name of the company. So I want to highlight them. And these are all US companies, by the way. I didn't highlight anything outside of the US. Let me put them in the chat. KB says, I think Robinhood was just recently in a scandal. See, yeah, and I was actually one person that was happy. I was like, ooh, glad I didn't invest in them. Or I'm glad I didn't go with them. A lot of people had been using Robinhood to buy like the meme stocks, for example, and a lot of folks were really upset about that. It's been a lot of fishy stuff because they stopped people from buying stock. And so that's what kind of held up some things. I had bought AMC stock, so I got some gains from that. Just because I saw what was happening and I had missed out on the GameStop. After talking to someone about GameStop, I was like, I could buy a share at $35, but I don't know. Like, I'll just leave it alone. And I missed it. But then I was like, okay, what else might be affected? Because sometimes you miss, certain things, and then you have to take a step back and say, okay, what else could, get gains from what's happening? And so I bought into AMC, not a ton, but I did get some gains from that. But yeah, the meme stocks, Robinhood investors, they were pretty upset because the CEO and owner decided to put a basically squash all that and keep people from investing, because the billionaires are losing money. They were shorting stuff and people were buying, and so the stock price went up instead, and their plans didn't really go according to what they thought was supposed to happen. The little guys were winning with Reddit stocks. They had the whole Reddit channels flying, and it was this big deal. So yeah, Robinhood. I mean, I won't say anything badly about Robinhood itself, but personally for me, I just never really got the concept of that. I prefer to continue using some companies that were just kind of tried and true. I'm kind of an old lady sometimes. I'm like, leave that alone. However, I do invest in crypto, so it's like but yeah, Robinhood for me, I was always just kind of on edge with it. It was just a little too new for me. I had tried Stash before, but I just couldn't get on the Robinhood boat. Just couldn't do it. Intuition was telling me something. Mike says, I'll Google it, Robinhood. Yeah, you'll see in the news a lot of interesting things. Hi, Louis Petit Bonday. Did I pronounce your name right? Welcome. I love Stop Talk, but from looking at the title, I'd rather talk about high value men and get my accounts. Oh, please don't. Please don't. The title, no. The title stems from me hearing the word high value man too much, because it's just getting ridiculous. Like, who cares? I'm at the point where I'm like, who cares? Let's talk about something realistic and talk about some money, because really, when you're talking about high value anything, you're typically talking about money, business, stock market, right? You're not talking about, I've never heard in an actual conversation someone go, yeah, I'm a high value woman that does X, Y, and Z. Like, who says that? It's up on the internet. What is, or I guess in the KS videos, if you watch. I do not watch, but I am hearing the words thrown around all over the place, and I'm just like, let's bring it back to some normalcy. This is when we need to talk about high value. so the next one I want to talk about as far as companies, Alphabet. I would just say it's a great company. Obviously, Google owns YouTube, so they're the ones paying all the YouTubers, right? So you're not going to say anything badly about them, but they're a company that's consistently growing. And let's just think about Google. When do you go buy on any given day without using Google? So if you're using Google, I just don't see any harm in buying into that stock. I did buy into the stock like sometime last year because of that simple thing. I'm always thinking realistically and looking at the fundamentals. Yeah, it makes sense. Why not? Why not do it? And again, it's a stable company. It's mature. It's low risk. It's not going to go poof, disappear one day like some other companies, paying really high dividends and such. Tanai says ADA to the moon. You know what? Ada Cardano, yes. That's been very positive for me. I am thinking about selling some of the crypto, because I know they're releasing something this upcoming month of September. And sometimes I just wonder if the anticipation for something is more priced into things versus what actually happens. So I think I'm going to take a few gains from ADA just in case the price dips or something happens. It's just, you don't know what the future holds with Cardano, but yeah, I bought into them pretty early, and they've been taking off. So I mean, I'm proud of Charles. He's doing it. He has a mission. He has a game plan. Love it, but I just don't know how far it will go. Okay, so let's see. So the next one I want to talk about is one I wasn't as familiar with, actually, and it's in the mortgage space. So let me share this one. It's called NVR. This is one in the highly listed high value stocks. So I want to talk about this one really briefly. This is a stock that's priced at, again, we talked about market capitalization. So the share price times the number of shares, right? They're priced at $5,125 per share. So again, this is one that you may want to use M1 Finance on to, get a fractional share if you're interested in them. But they are heavily engaged in home construction. So when the housing market is booming, they're probably booming. When the housing market is coming down or there's a lot of uncertainty, they're probably coming down like on today. Today it's going going right down. So they're priced in right around $5,000. And again, you can buy fractional shares of the company. Is a mortgage banking, title services, home construction. It's all of that. So again, when housing is booming, you're raking in the money. When it's not, you're probably going to see a dip in your portfolio. So the next one I want to talk about is going to be Cable One. Let me put this last one in the comments though, so you know what I was talking about, or did I put it in there? Oh yeah, I did. Perfect. So I see Ben's comment in here. Let me see here. Mike was researching the scandal. Ben is saying, let me ask you this: on a scale of 1 to 10, how much would you say the stock market is scammy or questionable between insider trading and bots reading your orders and junk? Yeah, it could be. But then what other option do we have? Because I think the bots will continue. I think the bots are in everything we do, even from if I say the word blue sweater, I feel like I'm going to get 10 ads talking about how I can purchase blue sweaters. So I don't know if I don't know if there's anything particular with that, but yes, the automation, the bots, all of that is definitely having an effect on a lot of things. But again, if you're not in the markets, how do you even win? You don't even have a chance at winning. So, alrighty. So the next one I want to talk about is this company called Cable One. And I was a little surprised that I hadn't heard about this. I was like, Cable One? How have I not heard about this company? So this is an American broadband communications provider. They're a former subsidiary of Graham Holdings Company. And so they are priced at, and they're actually up today, 13.18%. Cool. So their price, one stock, $2,077 for just one stock, right? They do have a really low dividend yield. It's at 0.53%, but I think that's probably because of, one, their high market capitalization. So people are going to want to buy into this company. And then they're very stable. They're just very stable. So yeah, and they're really large. Like the larger the company is, the less likely they are to pay out really, really high dividends, because they already know people are interested. Okay, so I wanted to briefly talk about them because, again, high share price, high market capitalization when you're looking at them too. So the next one I want to talk about is actually a bonus because I've actually gotten through all of my 5. So I want to talk about this one just because this one's a little more fun. And I'm like, I knew they had a high market capitalization, but I didn't know. I did not realize their stock had increased by this much. So I'm kicking myself because 5 years ago, I could have invested in this company and it was like a no-brainer. Of course they're doing great. So if I say the word guacamole, let me know if you can guess what company I'm talking about. Do you want some extra guac? It's going to pay you, or it's going to cost you. They're not going to pay you to get extra guac. This next company I'm talking about charges quite a bit for extra guac. I have not been there in a few years, but I know. Okay. While you're putting something in the comments to hopefully guess what company I am talking about, I'm going to pull up their stock price and put the last company I was talking about into the comments here, because that was a good one. I'm like, and it pays dividends. So that's always a plus factor. And KB is saying, I heard one of my friends say to invest in water because there was a documentary about how in the future water may be divided and may no longer be free. Yes. Was it Bill Gates? There was some billionaire. I want to say it was Bill Gates. Of course it's Bill Gates because no one likes Bill Gates. He's like one of the billionaires everyone likes to hate. Maybe following behind Jeff Bezos. But I think there were stories about him buying the water. And we talked about yesterday how he's buying farmland. So yes, definitely. So Tanai is making a guess for Moe's. It's not Moe's, but you're very close. It's a competitor to Moe's for sure. And Tanai is saying, I'm hungry. It's not Moe's. I actually have never, wait, hold on. No, I've been to Moe's one time. One time when I was in St. Louis. I did. I want to know if you guys can guess. Do you want extra guac? It's going to cost you. It's going to cost you. Okay. So they're actually on a down streak today, and they do not pay dividends. But I could foresee them in the future paying dividends. I really could. They do have restaurants in the US, they have restaurants in Canada, Germany, France, and the UK. So they're raking in the profits. It's the one that got away, right? I could still invest, but okay. So I'm gonna just give because I don't see the answer. Oh wait, Ben. Ben came in here and I think got it. Love me some guac, but I'm sorry. $14 for 3 tacos, a medium drink. Your boy is out. I'm either eating at home or sitting down at a real restaurant or fast fooding it. You've lost me at Chipotle. Yes, the company that I'm referring to is Chipotle. Chipotle is a high market or a high value stock with a high market capitalization. So their stock price right now is 1900. Thought I was going to say 19,000. $1,916. So $1,916. And this is an off day for them. They're trending down today. Interesting. So they're down just about, not even a full percent, 0.15%. They're not down by much. But this is a company to watch. I foresee them having some growth. I doubt a lot of people are liking their increase in prices. But I don't know. I think it's an interesting concept that they're doing, paying their workers more. I've always heard really good things about how they treat their employees. And that's always a good company that I think is good to invest in. So that wraps up the list. My bonus company was Chipotle. And again, I'm kicking myself because I'm like, why and how did I not invest in Chipotle years ago? Because that's what everyone was talking about. Everyone was like, oh, I'm going to Chipotle. I'm going to Chipotle. That or Chick-fil-A, right? Chipotle, Chick-fil-A, one or the other. Tanai says Del Taco. I have a funny story about Del Taco. I'll talk about it one day, but campus college story. Let's see. Ben says it's easy to be a high market stock when you're overpriced. Well, I'd rather jump in. My approach is to get a company when it's undervalued. When it's in red, that's when I like to buy. When it's in green, I consider, selling if I want to sell. But most of the times I'm in it for the long haul. Again, I've sold off 2 stocks. Not 2 stocks, but 2 companies with stocks that I owned. Either on the cusp of last year, but I think that was for part of it. I just wanted to do it before the end of the year. So anyway, tonight is saying, it's not even that good. People love Chipotle. People really love Chipotle. I don't understand completely why. When I used to eat it years ago, and I say years ago, like, I don't know, 4 years ago, it was good. I liked it. I liked it fine. The smell is better than the actual food. Like when you smell it, it's like, it smells delicious. But yeah, their prices are kind of weird, to Ben's point. Like it's like, come on, really? I can make this at home. And when it comes to Hispanic or Tex-Mex or whatever food, it's like you're using like 3 or 4 ingredients. I can make this at home. Like, how are you pricing things? This is why I don't really go to Mexican or Tex-Mex restaurants often, because I'm just like, okay, all right. Unless maybe it's a vegan joint, but overall I like hibachi. Like I just want something that's kind of fresh, something that is, well done, or a seafood restaurant, steakhouse, something like that. I'd rather have a sit down meal versus going to a place and grabbing something really quickly if I can avoid it. Can't Kill is saying, I really need to spend more time researching this stuff. Yes, well, that's what I'm here for too. That's what I'm here for. We can talk about it on Money Talk Mondays. And with that, I am pretty much wrapping things up here. In a conversation soon, I will be talking about mid-cap companies because I think this is a great way for you to get into some companies before it hits the what with Berkshire Hathaway, $400,000 for one stock, right? So how do we get to the point where we're recognizing some of these companies that are becoming stable? They have a lot of growth potential. We can see the movement, we can see the potential there. How do we invest in them sooner rather than later and benefit from those gains? So I'll be talking about that in the upcoming video. It may be my next one. It may be following Labor Day holiday. I haven't decided yet, but I think that will be a really good conversation for us to have because that's more what I think about typically. I'm always trying to get into companies earlier. I'm trying to get into companies when they're seeing, when there's red, when there's blood on Wall Street. That's when I like to invest. When everyone's talking down about the stock market, that's when I like to invest. When people are talking bad about crypto, that's when I like to invest because you can get more gains from that fear that other people have. So Boyce Watkins talks about this a lot, where he's saying uncertainty is when there's lots of uncertainty and fear, people are not thinking and acting rationally. And so if you are a person that can think rationally and see through things, see through the fear, you can make really nice gains from everyone else fearfully taking actions with selling, when really, if you just look at things really plainly, you know that, I mean, unless the world is ending, which it doesn't matter anyway, you will see ups and downs of the stock market and everything else. So in every market, you will see up and downs. You just want to take advantage of when things are at a discount, just like if you're going to purchase things on sale. Only in this world, you actually benefit from it. You buy something on sale, you don't really win because you bought it. You didn't get anything really in return outside of your item, which will go down in value. But we'll talk about that another day. Ben says true story. I actually did a deep analysis and determined that I am a I am a value man, but I'm awful at picking high value stocks. That comment is funny. Oh my gosh. Advice for beginners, conducting research. I've been listening to Wall Street Trapper, but still have a lot to learn. Honestly, tonight, and this is not financial advice, but I first started investing in stock, I feel like kind of late. I started in 2017 and I invested in my first couple of stocks. One was a loser. One was Fitbit. And I was just like, oh, I wear Fitbit, I'm going to invest. And it was such a silly idea. The other one was Snapchat. And this was one that I actually did some research into. Fitbit, I hadn't done my research. So it was like slap on the hand, right? But I love that I invested in Fitbit because it gave me the insight to see this is what happens when a stock is going down. This is, a good time to sell or not, right? So it allowed me to see something in my portfolio showing red really soon. And I was able to get used to seeing something like that because it can be detrimental when you're like, oh, let me buy 100 shares of Cody stock, and then it's like plummets. Let me buy 100 shares of AT&T stock, and then it just plummets, and you're like, what? I just lost, but you haven't lost anything. You don't lose and you don't gain until you actually sell. This is why it's realized versus unrealized gains when you look at your portfolio. So it's, if you don't sell when things are going down, you haven't lost. So I had to learn that lesson pretty early. So those are the two first stocks I bought. Snapchat was a big winner for me. Lately, I just held on to it. I did have a long-term view of it because I was thinking like, oh, this could be something. It could be the next Facebook or something. I think it's smart. And I knew someone that worked there. They didn't give me any insider trading or anything like that, insider chip, but they gave me some insight into the company. I was like, oh, this is a good company. I'm definitely doing it. And then the other one was, so Fitbit, Snapchat, Square, which was another winner. And it was really low back in 2017. What was the other one? Oh, AT&T. I started AT&T because I was like, oh, I want to get dividend, stocks. So yeah, those are some of the ones I first bought initially. And then I also had my 401k. So if you want to start out somewhere, I definitely would say for me, I had already had some exposure. because in like 2014, 2015, I invested in my 401k. And so with that, you see mutual, you're investing in mutual funds. So you get to kind of see your portfolio and everything. And that also helped. I would say this investing in individual stocks may be risky. We'll have some conversations on ETFs, which I think is a good option. And then we'll also talk about mutual funds as well at some point. So those are just some ideas. Again, not financial advice. However, that's where I got started. I just jumped right into it. And again, my gains have been way more than any losses. I think the only loss I really had was Fitbit. And then I got a tip from someone about a stock last year. And I just sold out. I was like, this is crap. I just trusted them and bought it. But I didn't spend much money. So again, gains were way higher than my losses. But again, you're going to see some losses. You're going to see some downs. But your goal is to have more gains than losses in the end. Wall Street Trapper, I have to check him out. I've heard about that guy. I love a good vegan place. Try Cafe Sunflower if you're ever in Atlanta. Oh, Cafe Sunflower. Thank you. I'm trying to think of, where did I go in Atlanta? I've been to Atlanta. What was it? It wasn't the Turkey Hut, because we were talking about that one and we didn't go there, but it was someplace. All right, let me look in here in the chat and then we're going to close this down. Hey, Mr. 100 Rounds, how are you? Welcome. Welcome, welcome, welcome. Have a good evening, KB. You are welcome, KB. And shout out to KB, my member, and King of Kill, who joined us earlier. Justin says, hey, Jess, what's your thoughts on trading cryptocurrencies or currencies? I don't trade currencies outside of cryptocurrencies. I don't know. I haven't gotten into Forex at all. So that would be a question for another channel. Here's one that I actually like. I'm going to put them in the chat. There are these two guys. Earn Your Leisure. I think they have some good information broadly across financial advice. So I would definitely check them out. I'm trying to think of who else would know about trading currencies. I want to say Trade with Terry, but I'm not sure if she goes that far. I think she's just stocks. Terry Igioma? I've talked to her. She's really sweet. So these are the two I would probably talk to. Both, I think Trade with Terry, she has different platforms that you can actually get involved with for cost, of course, where you learn how to trade, like the technicals, the fundamentals, all of that. And then Earn Your Leisure, they have a lot of content on YouTube for free, and then they do also have some packages as well. Trade with Terry, I would say, depending on your level of interest into investing, may be a little pricey for some, but I know she does have plans where you could pay like on a monthly basis or something like that, or break it up into portions as well. And then Earn Your Leisure, they have some really, really cost-effective plans. So that is a possibility. Kanai says, I forgot about Earn Your Leisure. That is how I found out about Wall Street Trapper. There you go. Yeah, I think they're good. I don't really watch them a lot, to be honest with you. I've only seen a few videos here and there. I first started listening to Financial Education. Let me see if I can find this guy, because the way he looks at stocks is how I started to try to look at stocks as well. Jeremy, Financial Education. Sorry, this playback is going to sound bad because of the typing. My apologies. Financial Education. So just look up Financial Education on YouTube and you will probably find him. Let me put him in the chat. Financial Education. If you are just learning stocks and you want to invest into individual stocks, I would check out Financial Education. The guy that manages that platform and posts videos, his name is Jeremy. He just has really good stock tips sometimes. I shouldn't say sometimes. I would say often. I think there's only been a few where he's like, it hasn't done as well as quickly, but if you're in for the long term, if you're looking for gains over a year or two or three, Jeremy has some really good content on um, just stock investments, and you get to see, even if you're not ready to throw in money, you get to see how he evaluates a stock and determines whether he wants to actually buy in. So there's a lot of things to consider. He looks more from a fundamental approach versus just technicals. I think more the technicals when it comes to the stock market comes in more with traders, like people that are like, I'm going to get in at this price, I'm going to get out at this price, and I'm going to make my money and I'm out and on to the next one, right? They're for the folks that are trading. So they're looking at the technicals. That's what Trade with Terry, or you can also search Terry Igioma. I think her on social media is I am Terry, or no, I am an investor. This is what her handle. Look at me just marketing folks out here. I am. It's so weird because I want to say Imani investor, but it's I am an investor, or I'm an investor, something like that. Anyway, that's Terry. But I have talked to her before. She is a very sweet lady. She has a teaching background, and I have no doubt at all that she could teach anyone how to trade and how to trade technical. So if you were interested in like, hey, I want to replace my income and I want to learn how to trade and make money that way, she'd probably be the way to go. If you're a long-term investor, I would recommend Jeremy at Financial Education. He's an interesting character. I have to just put the PSA out there. He's an interesting character. He has a lot of energy. When I first started watching him, he came across as a little goofy because of his persona, because he'd be like, hey, hello there, guys, and da 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 da. And that's kind of how he sounds at the beginning. But if you give him a chance and watch one full video, I would put money on it that you will learn something about how to invest in a stock or in a company's stock if you're interested. And you can start slowly. You can start just educating yourself, throwing in a little bit of money. My first investment, I put in $100 into one of my exchanges, and that was the starting point. And now that one is about, I think it's about 15,000. But yeah, you can start small. You don't have to put in $10,000 into a stock market exchange. You don't have to do that. You can start small and work your way up, and just if you regularly invest, that's how you can grow your money. Because sometimes the stock market is up, sometimes it's down. So you generally will kind of market price average out the cost. Or if you're like me, you more so buy in when things are a little rough, but you have to have a lot of courage to do that. So I wouldn't recommend just anyone jumping in and saying, oh, I'm going to buy stocks when everything is going down, because that's really a tough thing to do mentally, because naturally you don't want to do that. You don't want to be, oh, everyone's losing money, let me throw in some money in here. It does not come natural to most people. And this is why a lot of people sell and then they lose out. So anyway, that's my last piece on that. Let's see. Hi, Simplistically Digital. Welcome in. Nice to see you here. Let's see. Tanai says, yes, I'm looking for long-term investments. Yep, then you'll do best with probably Jeremy at Financial Education. He's pretty cool. Thanks for taking my question, Jessica. Do you have any thoughts on the Fed tapering discussions and how that's looking to affect the current and future bond market? Honestly, I'm just playing it day by day, day by day. Look, at some point, it has to end. You can't just keep putting money into these companies. Like, at some point, it's going to end. And so, yes, when that happens, and sometimes I guess it just depends. Once we have some certainty about what's going to happen, I think it's helpful. But yeah, at some point, it's got to end. And we got to be ready for that, because yes, I think the markets will go down. They will freak out as per usual. But you got to be ready, because just because there's a downturn, there's going to be upturn. So, but yes, it will definitely, look, when the stock markets are down, the bond market is up. So You can definitely diversify if you would like to. For me, I don't know if it's worth it personally for me to invest very heavily in bonds. I am slightly invested just due to my 401k, but outside of that, I'm not heavily invested there. Just, yeah, I'm very cautious with bonds. So, probably not the best perspective, but that's my own perspective. So, investing on a monthly basis. Yeah, if you can invest on a monthly basis, go for it. But just make sure you're educated, not just throwing money in. You feel comfortable about what you're putting in. Don't put in money that you need, because then you're going to be more likely to pull your money out when there is a downturn, right? If you think about it, and I've talked about this a few times, if you think about it as, oh my gosh, I'm going to spend $100 this weekend either way. I'm going to spend it on steak dinner, and I'm going to eat that steak and I'm going to be happy. Well, if you put that money, $100 into a steak dinner, you're going to lose the money anyway. It's going to be gone. You're going to eat it. You're eating the money, right? It's gone. Poof. But if you invested, so you take the chance that it could be gone, right? But you have a better chance of that money growing and gaining, either value, as we talked about the value stocks, or you getting dividends back for your money just being in a certain stock, versus saving in a bank account, which you get 0.03% or whatever, wherever we're at now, 0.1%. So that's my take on it. I'm going to close this out. I actually need to go to the gym, so I need to get ready for that. Do you have any highly speculative investments or more passive in your approach? I would say the best speculative investments I have are probably cryptocurrencies right now. And hello, Keenan. All right, I'm gonna close things out. Again, I have to get ready to go to the gym, but it was a pleasure to talk to you. Thank you so much for joining my Money Talk Mondays. I don't know what the next topic will be, but I will pick something really interesting for us to talk about. And I am definitely hopeful that it is, positive conversation and that you learn something at the end of the day. And with that, thank you so much for watching, and I will see you in my next video or live chat. Alrighty, guys. Bye.